Roth IRAs offer a great way to increase financial strength and create a bucket of money for retirement. In this short video, I'm going to share the 2022 numbers, both the Roth income limit and the Roth contribution limit. Also, I'm going to give you a brief explanation about how Roth accounts differ from traditional accounts. And lastly, whether this investment vehicle is right for you. For 2022, unfortunately, savers won't be able to contribute more to these accounts in 2022 than they did in 2021. There is a bit of good news. The IRS has increased the income limits for contributing to a Roth IRA for 2022. So let's get into those limits a little bit. For contributions, the maximum amount you can contribute is $6,000 for 2022, and that's if you're younger than age 50. If you're older than 50, you have what's known as a catch-up contribution. You can add $1,000, bringing the total contribution to $7,000. This remains unchanged. It actually hasn't changed in the last couple of years. The actual amount that you're allowed to contribute to a Roth IRA is based on your income. To be eligible to contribute the maximum amount in 2022, your modified adjusted gross income must be less than $129,000 if you're single or $204,000 if you're married and filing jointly. Contributions begin to be phased out above these amounts, and you can't put any money into a Roth IRA once your income reaches $144,000 if you're a single filer or $214,000 if you're married filing jointly. These numbers are up slightly from 2021, so there's that. Thank you, Uncle Sam. So let's get a little bit into Roth IRAs versus traditional IRAs. So unlike contributions to a traditional IRA, which may be tax deductible, a Roth IRA has no upfront tax break. So money goes into a Roth after it has already been taxed. But when you start pulling money out in retirement, your withdrawals are tax-free. This is what everybody loves. Also, Roths, unlike traditional IRAs, are not subject to required minimum distributions at age 72. They're also more flexible than traditional deductible IRAs. You can withdraw contributions to a Roth account anytime, tax and penalty free. Now, if you want to withdraw earnings tax free though, you must be at least 59 and a half, and you must have owned the Roth account for at least 5 years. The clock on that 5-year holding period starts ticking on January 1st of the year you open the account. Now, I want to be very specific here. This 5-year rule can be kind of confusing if you let it be. Don't let it be. If I had $1 for every time someone said Roth accounts aren't liquid, I would be this guy. Do I want to be this guy? Probably fun for a hot minute. Roth money is liquid, meaning you can take a distribution. I don't suggest it, but it is possible. It's the growth of Roth funds that are a bit more restricted. Darryl, do you think people like our videos? Beats me. How do we find out? We can ask them. How? Like this. If you like our videos, give us a thumbs up below. Anything else? Yes, subscribe. This way you'll see our content right away. Tell the viewers why we do this. To help them create safety, simplicity, and most of all, financial strength in the future. Got it. To subscribe, just click the button below. Now back to our regularly scheduled video. You can open up a Roth IRA through a bank, a brokerage, a mutual fund, or an insurance company. And you can invest your retirement money in stocks and bonds, mutual funds, ETFs, and other approved investments. It's just like a normal account. It's just a different tax situation. You have until the federal tax filing deadline to make your Roth IRA contribution for the prior year. Is a Roth IRA right for you? There isn't a minimum age limit to open a Roth IRA, and you can contribute to another person's Roth account as a gift, which is perfect for parents looking to kickstart a child's retirement savings. I hope my boys aren't watching because their holiday gift this year is a sweater from the Gap. No way they're watching. There are 2 caveats. Recipients must have earned income, and you can only contribute an amount up to that person's actual earnings for that year, or $6,000, whichever is less. Roths can also provide valuable tax diversification in retirement and can be a great way to balance other sources of income, such as withdrawals from pensions, 401k, Social Security, and those types of accounts. I want to finally note that if you invest in both a Roth IRA and a traditional IRA, the total amount of money you contribute to both accounts can't exceed the annual limit. If you do exceed it, the IRS might hit you with a 6% excessive contribution penalty. If you want to know more about Roth conversions, watch this video, or maybe it's over here, I don't know, where I get in front of the whiteboard and share how the taxes on a conversion are calculated. Is it an exciting video? Not so much. Is it informative? Oh yeah. Thanks for watching.